Hi everyone, today let's talk about my trading plan for the upcoming week. I'll start off by saying last week was a pretty good week. You can see I was down almost 17,000 in my bigger account and then 787 in my smaller account. And I was long on the IWM as well as the QQQs going into the weekend. And now I'm down only 14,500 in my bigger account and just under $200 in my larger account, putting those values at 58,000 and 22,000 respectively. Then we'll talk about how inflation might finally be slowing. Then, of course, we'll go over all of the major indices, starting with the S&Ps, the NASDAQ, IWM, XOP, talk about ARK again, and then a stock that I haven't been watching, but I should have been watching closer, DigitalOcean Holdings. If you like trading stocks and options and making money, definitely like and subscribe. I make individual stock reviews, as well as videos like this every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. They say the Fed's favorite inflation measure rose by 4.9% in April, and a sign that the price increases could be slowing. They say the Core Personal Consumption Expenditure Price Index, the Fed's preferred inflation gauge, rose by 4.9% from a year ago in April. This is in line with estimates and is actually a decrease from March. They say 4.9% is still elevated, but it's lower than it was before, down from 5.2% in March. This is an increase of 0.3% on a month-over-month basis, and in line with the Dow Jones estimates. If you include food and energy, the percentage did go up a little bit higher at 6.3%, which is still down from 6.6% the previous month. They say that this inflation still has not slowed spending, and that consumers are starting to tap into their savings to continue to spend as much as they have been. Consumers are still spending on all kinds of things, such as bars and restaurants as well as goods. You could also argue that some of this spending is fueled by higher wages, as well as Americans drawing from that $2 trillion in savings that they are estimated to have. They still say inflation is still moving at a very fast pace, with federal stimulus from the COVID pandemic fueling those price increases, as well as supply chain restrictions and the war in Ukraine sending energy prices higher and potentially leading to food shortages. Energy has jumped probably the highest out of any section, surging more than 11% last month and up 51% from a year ago. The president said the report is a sign of progress, but of course they still have more work to do. The Fed is still pointing to the fact that they want to reach 2%. They've currently only done 75 basis points, so they still have 1.25% to go until we hit that 2% goal at a minimum. Moving over here to the S&P 500, on the daily chart you can see we had these really big, strong couple days. Monday was a little bit weak. Tuesday was a down day and we were concerned. And then we got those big 3 days in a row, totaling around almost 6% from the start of Wednesday. But now you can see we're getting back into this zone of resistance that we saw here in April, in February and March, and again here starting all the way back in November of 21. So there's nothing to say that this can't continue. We get a huge move all the way up to the 55 EMA here on the daily chart. It's not impossible, but it does seem like we're getting into that resistance zone coming off of a really impulsive move. And it would seem to me that a retracement and some consolidation seems more likely. We did have a move similar to this here in March where we had a big, strong couple days, a little bit of a retrace, and then a continuation up to that higher range and a retest of that 144 EMA. Give an idea of what that percentage looked like. That was closer to 10% of a run. Did have a little red day here in the middle, but big run there. If you're going from the lows on Monday, you could argue that we're up a little bit more than 6%. But if we did hit that 10% level, again, that would put us right in that 426 area at a close to 10% run, similar to what we saw before. Looking at the 4 hour briefly, you can see we're touching that 144 EMA. Again, looking at that resistance level sitting at 418 or so. And if we broke down, I would expect to see some support somewhere around 407. If we break through those levels, then we're going to be headed back towards where we were, closer to 395 or so. Moving over here to the NASDAQ on the daily chart, you can see we had that big same 3-day push, a little bit stronger here at around 8%. But this is, of course, a growth stock, and it's down more than the S&Ps. So it makes sense that it would rally a little bit more than the S&Ps. But again, coming into that resistance level here, potentially a breakthrough here. If it does break through and sustains that rally, it could go to around 325 before we have any solid resistance. Again, this is very aggressive, which could potentially indicate that it needs a little bit of a retracement, maybe back into this 300 level before we get a continuation. And then in the long term, I expect this trend to hold and that we're going to see further downside. Moving over to the 4 hour, you can see we're just off of that 144 EMA, currently sitting at 316 on the 4 hour, so So potentially a little bit higher, maybe 2% higher until we touch that, at which point then I would expect a retracement and then some consolidation, potentially back down to this 305 or 300 level. And then we could either continue up or down from there. I also want to show the tasty charts here with the average trading range bands. You can see here that last rally moved from the second lower ATR band all the way to the top highest ATR band. Again, similar here, second ATR band. If we do see a run up to that highest ATR band, that could put us in that 330 range, which would be a really aggressive move and stronger than I would expect. Moving down to the 12-hour chart, I want to show you exactly what that looks like. Again, second lowest ATR band, hitting that third higher ATR band. Then we rallied right along that band until we finally got that breakdown. So hitting this higher band doesn't necessarily mean that we're going to stop immediately. And this is still indicating there's a little bit more room on the 12-hour chart here. And then on that daily chart, there's still plenty of room here all the way up to that 330 level if we get a similar run that we saw here in the middle of March. Moving over here to IWM or the Russell 2000, you can see we had that nice double bottom along with everything else. And then a very strong couple of days here. More similar to the S&P 500 than the NASDAQ, but again, very strong with that 55 EMA sitting right at resistance here at 192. So maybe a couple more percentage points of upside here until we hit that stronger resistance. And then at that point, I would expect either a move down or a consolidation before continuing in this longer term uptrend. Remember, the IWM has not broken down quite as much as the other indices, and this longer term uptrend is still somewhat intact. Moving over here to XOP, at the end of the week prior to last, we had this doji. I thought we'd get a little bit of a retracement into this support level before we got a rally, but I also mentioned that if we did break through this level, the next resistance level is all the way up here around 172 or 3, and basically that's what happened. So we blew right through these previous highs, continuing higher all the way up to 157. Very strong aggressive move out of this previous trading range, and that makes this look more like a bull flag, and that this is going to continue higher, not necessarily in a straight line, but now we have support here at 147.50, and resistance is not until closer to that 173 level. So still very bullish on energy, whether you're trading XOP or XLE. Moving over here to ARK Innovation and growth, you can see we had that low and then a higher low. So a little bit more bullish than the double bottom. And then we had this big, strong 3 days, which altogether was around 16%. So it doesn't look as big as the other charts, but this is growth and it moves quite a bit more. So that was a 16% rally. And from the lows, that's a bigger move of around 28%. So definitely a lot of potential here in ARK Innovation, despite this big long-term downtrend that we've been experiencing. There's still some fight in there and potential for shorter-term trades. We're currently at that longer-term resistance at $45 or $46. But if we did come up here and retest the 55 EMA like we've been looking at the previous charts, that should be closer to $53, which again would be around 18% higher than we are right now, which is another very good potential move. And lastly, for the charts here, let's talk about DigitalOcean Holdings. This is a pretty young company. They just went public here on 24 March of 21, rallied really aggressively with the rest of growth, and tanked pretty aggressively with the rest of growth. That move from the lows was 265%, and then that retracement was around 76 or 77%. So very volatile stock. Definitely don't play this one if you're not willing to see some volatility. But again, with volatility comes some opportunity. And you can see we had the lows here on 12 May, rallied up into the beginning of that last week. So we didn't even get a full double bottom, just had a really big single bottom and then an aggressive move higher, which was close to 65 or 66%. Again, kind of at that resistance point where you've seen interactions here we've seen interactions at this price level quite a while here in March of last year, December, again in January, February of this year, March, again here in April, then potentially again here in June. This company, at least on the charts, looks pretty strong, and it's something to watch going into the next week or so. For me and my trading plan going into the next week, my preference would be to get this $2.50 credit here on Tuesday, closer to this 305 or 302 price range. Somewhere in here, if we get a nice little dip into the open, or I can sell some decent puts, I wouldn't mind selling some single day puts into that price range. And that's really what I'm hoping for generally across the board. A nice little dip into the open of the week, somewhat of a retrace and consolidation, and then a continuation higher. I certainly think there's potential for more upside, but I would like to see a move lower to sell puts into first. Otherwise, looking at my current account values here at 58,000 and 22,000, with decent gains over the last week, along with pretty much everybody else. And then looking at my current positions, I actually bought some really cheap puts going into the close. Everything was up so high that it seemed like there was potential for a retracement. The NASDAQ rallying over 3% that day, as well as the IWM rallying a similar amount. So really cheap puts, just $12 and $20 here. If it continues to rally and these end up worthless, that's fine. But I think there's a potential that we could see some retracement just because the move was so aggressive. And because those moves are so aggressive, that's also why I'm not long going into the weekend. And I'll wait to reestablish myself on Tuesday just to see what happens. Let me know down in the comments section what you think of the markets going into the next week and what stocks you're trading. Definitely let me know if there's some stocks you want me to cover, either in an individual video or in my trading plan videos. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future videos. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.